Alright, hello everyone and welcome to a daily update of my 1000 day challenge. This is day 34, so let's get started. Alright, so I've already updated in terms of the daily market trend and also market structure for all the market that I'm monitoring and also for Bitcoin itself. So as you can see for S&P 500, Nasdaq, all of them still look really bullish, making higher highs and higher low, no clear sign of bearish momentum yet. So how high it can go is really up to anybody's game because right now it's at all-time high. And when things has broken to all-time high, it tends to continue in a direction for two reasons. Mainly because there isn't some sort like a upside resistance that traders look into whereby they will take profit. So there's less of a resistance in that sense. Alright, as for ASHR, you can see that after breaking up, it's still potentially consolidating over here. So overall, it still looks bullish. Nothing has changed. As long as as price doesn't break below the 20 exponential moving average, then I'm leaning towards the upside in terms of the near-term wise. Of course, long-term wise, I do see further upside for ASHR, but for near-term wise, as long as price remain above the horizontal and also the 20 exponential moving average on the daily chart, then things looks great as well. Alright, as for KWEB, even though he has made a higher high above the horizontal resistance, things seem to be breaking down. So this is something that you have to bear in mind, that whenever you see your trading books and stuff like that, they will always talk about the ascending triangle, and once you break out, things will always be on the right side of things, and then you have a fixed target per se. So what example you can see over here is that things don't really turn out like what you see in the books, and also in theory exactly to the dot. So you have to manage accordingly. So in this case, bear in mind that as long as price doesn't break below 20 exponential moving average, or more importantly, 50 simple moving average, I will still lean towards a potential nice consolidation area around here for you to accumulate before it nicely breaks out above, or it could also break down below as well. So if it does break down below, I'll look to buy at this support region and also at this 200 simple moving average, which will likely be catching up in time to come as well. Alright, and for Bitcoin, actually, there's a huge breakup which actually missed. It happened like in my time, like almost 2 hours ago. Yeah, so I was having my dinner and stuff like that. I didn't actually notice the market. That was my fault. My fault on that. But basically, like what if you recall the teachings or the sharing that I've shared with you, you can see that price actually broke below the 200 simple moving average sharply. And this is the small little consolidation pattern. So I do not deny that this is really, really very short for consolidation. So I do not expect such a strong kind of breakdown if I were to look at it purely in terms of the, yeah, if I were to look at it this way, I wouldn't expect it to break down such sharply. But where I would have entered, if you're looking in terms of price action mark drawn over here, I would only enter upon a break below this recent low. So you can put it over here at around 11.1K per se. And my stop loss will actually be here, and my target will be at this, which is the horizontal support on the monthly chart. Then you will notice that why is the risk to reward that low. So in this case, right, if you're looking, the reason why I'm putting the sell stop to be such low is because if you just put it over here, it could be triggered. It could just drop over here, find support, which it did once, and it did twice. So even though it does seem that it's weak, considered to be tested 1 time, 2 times, 3 times, and now the 4th time before it breaks, I would still put my sell stop order below to be on the conservative end to avoid entering a forced breakout kind of situation. On the other hand, if you're trying to enter on a better risk to reward, what I would do is I will go on a shorter time frame, say for example on a 1 hour chart. So you can see this is a nice inverted red doji like kind of candlestick. So it's all retracted clearly on the 20 exponential moving average on the 1 hour chart. So over here, you'll be looking to enter a short, but with my entry still below here, basically treating here and here. So what will change is basically my stop loss will tighten as price goes down. So for example, before this, once this is formed, my stop loss is here, but my sell stop order will be here. Then when it moves down, I will move down after this hour and slowly move down. So when it triggers, right, by the time the last one, when it breaks below, right, this will be the candlestick that I'll be referencing as a stop loss, which is here. So when you enter on the breakout, I will usually take the candlestick before as the guidance for the stop loss. So this is so that you can see over here, I will have increased the risk to reward setup by moving it close to this candlestick itself. Yeah, so somewhere you get 1:2 1.3 kind of risk to reward setup. So over here, I would take like 50% or even 80% of the profit. And reason being is this: you look at the daily chart, something I didn't mention earlier, is that ultimately price on the daily chart is above the 200 simple moving average. So I do see potential reversal going back towards the upside. So this is something to bear in mind when I'm trading sort of against the trend in that sense. Although on the 4-hour chart, you're definitely trading with the trend. On the daily chart, you're actually trading against the trend still. So for this kind of structure, I do see potential that you can see over here. If you fail to take your profit near this region, there's a potential that you can bounce back first, and then you have to risk going through that period whereby you see your profit getting reduced. So that's something that I do manage actively as well. All right, so as you understand, I myself also didn't enter this trade as I failed to execute it in time. So what in this case I will do is basically I'll wait. So at this point of time, please do not have the FOMO kind of effect or fear of missing out. Basically, what I'll do over here is I'll wait for further signs of consolidation. If prices consolidate over here, I will want it to consolidate until and let the 20 exponential average catches up before looking to enter a short. I do expect a bounce, but personally, I will not enter a long because it's counter trend trade. And when you trade counter trend, generally you have to manage very actively. So unless I will be at the computer screen, like I'm able to spend the whole day at it, then yeah, I will consider taking it just for the fun to capture some sort of small little profits. But those kind of profit generally isn't a lot. It's just mainly for the fun sake. Unless you really do it as a full time, then yeah, it could turn out to be better. But so right now, I do not have the right to trade counter trend efficiently to the extent. So I still have to very monitor very actively. So yeah, that's basically what I do. So for size of potential in terms of bullish momentum, you will have to break yeah, at least 11.5K again before I would consider potentially, which is breaking before this previous high that was made. Yep, so that's about it. That's how I consider and use the various time frame for analysis. If you enjoyed this, please kindly like the video, subscribe, and even share with your friends or who are interested in trading. And if you have any questions in terms of trading wise, likewise, feel free to drop down a comment below. Otherwise, have a great day, everyone, and I'll see you guys tomorrow. Take care. Bye-bye.